So in this video, I want to show the difference between how an occupational pension scheme works for tax and how a personal pension scheme works for tax. So let's think of a simple scenario. And for this, we're ignoring the personal allowance. This is the person's top slice of income. So we'll just take everything as it is. So let's think of a scenario. Someone earns £1,000 at work. They are a basic rate taxpayer. They'll pay tax at a rate of 20%, which means obviously they will pay tax of £200. So from your salary of £1,000, you'll take off your tax of £200. That leaves you with net pay of £800. So that's basic scenario, and this is someone who is not putting any money into a pension. So let's look at the same person, but they are going to put £100 into an occupational pension. So this is a pension run by the person's employer. So they get paid £1,000. However, they will pay into their occupational pension of £100, and this is a pre-tax deduction, so that's taken off their net pay. So now for tax purposes, their salary is £900. Now we are going to calculate their tax, which again, they'll pay a rate of 20%. However, now, because their income for tax purposes is only £900, they're going to pay tax of that, which is £180. So take their tax from that. So take £180 off. That's given them net pay of £720. So you can see here, without the pension, their pay was £800. With the pension, their net pay is £720. So the net cost to them, out of their pay packet that they can spend, is £80. However, £100 has gone into their pension. So for a cost of only £80, £100 has gone into their pension, and they've got what is known as a tax credit, in this case of £20. Let's look at the same scenario, but this person is a higher rate taxpayer. So without a pension, the salary is £1,000, and they'll pay tax at 40%, which is £400. So the net pay, you take that off, £600. Now, if they were to put some money, the same £100 into a pension, £1,000 less the £100 that goes into their pension means before tax their salary is £900. We'll then tax the £900, the same rate, at 40%, gives tax of £360, meaning their net pay now, if you take that off, take off the 360, is £540. So now if we look at this, we can see the net pay before, without the pension, was £600. Now with the pension it's £540. They're actually only £60 worse off after their net pay, but they still have £100 in their pension pot. And the same would be the same. The principle is the same if there were additional high rate taxpayer and we changed it to 45%. They'll still get £100 in their pension, but the net cost to them would be less. So you can see here, the tax credit, if you've got an occupational pension, is done at source, and you'll always get the right tax credit because your employer knows how much you're getting paid. Let's compare this to a personal pension. So with a personal pension, you pay for that out of your own money after you've been taxed, whether you're employed or you'll pay out of your own money if you're self-employed. And the way it works to make it fair is you will still get a tax credit. So if you've got a personal pension and you put £80 into your pension, so that goes off into your pension pot, your pension provider goes to HMRC, the government, and said so-and-so has put £80 in. They need to get a tax credit. So then HMRC will give them an extra £20. And so overall, you've now got £100 in your pension pot. And it's only cost you £80. So you've got the 20% tax credit. It costs you exactly the same to get £100 into your pension pot as it does with an occupational pension scheme, as long as you are a basic rate taxpayer. But the problem is your pension provider doesn't know if you're a high rate taxpayer or an additional rate taxpayer, so they can't go and ask for extra tax credits from HMRC because they don't know. They will always ask for a 20% tax credit. So if you're a higher rate taxpayer, at the moment, it looks like you are missing out. So what HMRC do to make it fair, you'll extend your basic rate band. So instead of your basic rate band being £37,700, it will then become £37,800. So there's an additional £100. We extend it by the gross amount of your pension contribution. So that's the bit you put in plus the 20% tax credit. So that means on this £100, instead of paying 40% tax like you would have previously, and you're paying, obviously 40% of 100 is £40, you're now only paying 20%, which means on this £100, you're only paying £20 tax. So now you've saved £20 in tax. So this then comes back into your bank account as a tax refund. And so the net effect of you, if you are a higher rate taxpayer, is overall you've got £100 into your pension. It's cost you £60 initially, but you get your £20 back. And that means the net overall effect to you is the cost of getting £100 of your pension is £60. The mechanics of it are different, but the end result is the same. And likewise, if you were an additional higher rate taxpayer, we'd extend the additional rate band. So that would mean, so for an extra £100, instead of paying 45%, which is obviously, that's going to be £45, for that extended higher rate band, when I say only, it's still 40%, you're paying 40% instead, which is £40, so that saves you £5, and then that would come back to your bank account as a refund. So that would only cost you £55, which is exactly what it would cost you if you had an occupational pension scheme. Because if you had an occupational pension scheme, for that you'd be taking off 45% and you'd be left with £55 for every £100 that you're putting into your pension.